Origination in investment banking. Presentation overview. Origination basics. We'll cover the fundamentals of origination, including the key concepts involved and how they apply to investment banking industry. Debt origination. We'll explore debt origination, one of the key types of origination in investment banking, and how it differs from equity origination. Equity origination. We'll explore equity origination, another important type of origination in investment banking, and how it differs from debt origination. Mergers and acquisition. We'll explore mergers and acquisitions, a third type of origination in investment banking, and how it differs from both debt and equity origination. Best practices for origination. We'll discuss best practices for origination and how to succeed in this competitive field, including tips for networking, lead generation, and deal execution. Debt origination. Debt securities. Debt securities are financial instruments that represent a loan given by the buyer to the seller and are sold to institutional and retail investors. They typically include bonds and syndicated loans. Characteristics of debt securities. Debt securities have several key characteristics, such as fixing or floating interest rates, maturity dates, and credit ratings that are structured to meet the needs of clients and attract investors. Bonds. Government bonds. Government bonds are issued by national governments and are considered the safest investment option. They are backed by the full faith and credit of the government and pay a fixed interest rate. Corporate bonds. Corporate bonds are issued by corporations to raise capital. They are riskier than government bonds, but typically offer higher yields. The creditworthiness of the corporation issuing the bond affects its price and yield. High yield bonds. High yield bonds, also known as junk bonds, are issued by corporations with less than perfect credit ratings. They offer higher yields, but are considered riskier investments. Syndicated loans. Syndicated loans are a type of debt financing in which multiple lenders provide funds to a single borrower. The loans are structured and managed by a lead arranger who coordinates the lending syndicate. Syndicated loans offer benefits for both lenders and borrowers, but also come with risks. Equity origination. Equity securities. Equity securities are financial instruments that represent ownership in a company. Common types of equity securities include stocks, shares, and units in a mutual fund. The equity origination process. The equity origination process involves the creation and sale of equity securities to investors. Investment banks play an important role in preparing companies for an IPO, initial public offering, or FO, follow-on offerings, including conducting due diligence, underwriting the offering, and marketing the securities to investors. Initial public offerings, IPOs. Underwriting. Underwriting is the process by which an investment bank assesses a company's financial health and determines the value of its shares before issuing them to the public. Roadshows. Roadshows are presentations given by a company's management team to potential investors in order to generate interest in the upcoming IPO. They are an important part of the IPO process. Pricing the shares. Pricing the shares is the final step in the IPO process. It involves setting the initial price for the shares and determining the total amount of capital that the company will raise through the IPO. Follow-on offerings, FOs. Definition of follow-on offerings. A follow-on offering is a sale of additional shares of stock by a company that has already gone public. FOs are typically used to raise additional capital for the company or provide liquidity for existing shareholders. Types of FOs. There are several types of FOs, including primary offering, secondary offering, and mixed offering. Primary offerings are when the company issues new shares to raise additional capital. Secondary offerings are when existing shareholders sell some of their shares to raise money. Mixed offerings are a combination of both primary and secondary offerings. Issuing FOs. Issuing FOs involves a variety of steps, including selecting the investment bank to manage the offering, determining the offering price and number of shares to be issued, and preparing the prospectus. The investment bank plays a critical role in managing the offering, including underwriting the offering and helping to market the shares to potential investors. Mergers and acquisitions. Horizontal mergers. Horizontal mergers involve the consolidation of companies that operate in the same industry and provide similar goods or services. These mergers are often aimed at increasing market share and reducing competition. Vertical mergers. Vertical mergers involve the combination of companies that operate at different stages of the supply chain. These mergers are often aimed at increasing efficiency and reducing costs. Conglomerate mergers. Conglomerate mergers involve the combination of companies that operate in unrelated industries. These mergers are often aimed at diversifying the business and reducing risks. Role of investment banks. Investment banks play a critical role in advising on and financing mergers and acquisitions. They provide expertise in valuation, negotiation, and deal structuring and help companies raise capital to finance transactions. Mergers. Horizontal mergers. A merger between companies operating in the same industry and offering similar products or services is known as a horizontal merger. This type of merger is often done to increase market share, reduce competition, and achieve economies of scale. Vertical mergers. A merger between companies operating in different stages of the same supply chain is known as a vertical merger. This type of merger is often done to increase efficiency, reduce costs, and gain more control over the supply chain. Conglomerate mergers. A merger between companies operating in unrelated industries is known as a conglomerate merger. This type of merger is often done to diversify the business portfolio, reduce risk, and enter new markets. Acquisitions. Types of acquisitions. There are different types of acquisitions, including friendly and hostile acquisitions. Friendly acquisitions are agreed upon by both parties, while hostile acquisitions involve the acquiring company bypassing the target company's management and directly buying the stock. Investment banks' role. Investment banks play a key role in advising and financing acquisitions. They help clients evaluate potential acquisition targets, negotiate deal terms, and secure financing for the transaction. Conclusion. Importance of investment banking origination. Origination is a crucial aspect of investment banking that involves creating and managing client relationships. It is the foundation upon which all investment banking products and services are built. Types of origination. There are three types of origination in investment banking: debt origination, equity origination, and mergers and acquisition. Each type plays a unique role in the investment banking process. Best practices for origination. To succeed in investment banking origination, it is essential to build strong client relationships, develop a deep understanding of industry trends, and stay up to date with the latest market developments. Thank you.